Cast is now starting. All attendees are in listen-only mode.
I can't see your screen yet, Rob. Did you have it on? Test it. Oh, there it is. Okay. Hey, good afternoon, guys. Rob's going to start. He's going to go through his charts. Really good trading action with this volatility. I've had 3 really good days and a decent week last week. So I think I might be done for the day. Really good mornings for me lately with this futures action. Some really good action that Rob called yesterday. He thought that we would go further down today, even though it looked like we were getting some hammers and tweezers. I initially saw those. I didn't trade in the afternoon, but I thought we'd push up, and Rob called it right in the chat yesterday afternoon by saying that if we don't push up, we could shift back down again if we get a bear flag, and we actually did, and we sold off right at the open today. Some really key levels that we were looking at today that really helped out with the action. So nice to have Rob as a second thought process when I'm looking at something. He really knows his stuff. Go ahead, Rob. Take it away.
Thank you, Frank. Welcome, everyone. Glad to have you join us for another Wednesday webinar. It is, imagine today's going to be a little bit more impactful. We're going to have more to cover because we have seen the market have some weakness, and we are definitely in a different place from a technical perspective than we were last week, and certainly over the last several months. We have some big time breakdowns on the major indices, particularly on the S&P 500 and on IWM. And we'll get to those in a second. As usual, we're going to go ahead and cover the 4 major market ETFs. We're going to look at the S&P 500, the NASDAQ Composite, the Dow Jones, and the Russell 2000. Once we finish with that, we will take a quick look at the US dollar, see how it's affecting commodities, particularly gold and silver, and we'll also take a look at oil, see how it's doing. It's been very strong lately. If you like this sort of analysis, you could find more of my trades or trade ideas by following me at Twitter at StockDarts. You can follow Frank at StockGuy22 on Twitter as well. You can find both of us on YouTube, and I have a blog / trading site at patreon.com/StockDarts, where you can also go ahead and follow and get some insider access to some of my trades if you are so inclined. Even a few of you guys are already members, but for those of you that are not, feel free to follow me anywhere on there, and you can get quicker access to my trade ideas. We had some good winners yesterday, or at least they started off as winners with some strong oil names and oil bounces. And I think that those are still going to work out in the long run, but they are suffering under today's sell-off as well. So let's take a look. Here's the S&P 500. And as you can see right off of the bat, you can see we've got a big breakdown here, right? We've got a big red candle. What you'll notice is what Frank was alluding to was yesterday. This looked like it was a possible bounce, right? Especially in the afternoon when I tweeted it. It actually, that yesterday's candle was actually still green. And it looked like, yeah, we got a V-bottom. We've got a nice bounce here at support. This is typically what you're looking for. But judging by what I was watching on the small caps with IWM, what I saw out of some of the other indices, looked like there was still more room to the downside. And so what I expected was that we'd sort of test the price action below the 50. I didn't really expect us to slice through that channel immediately in one day. What I expected us to do was sort of trade and explore this price area between about 286 to about maybe 285, 284. We're actually a bit below there right now. And the question is, what's going to happen from here, right? Are we going to continue slicing down towards further support levels, or are we going to sort of stabilize here and try to reclaim this channel that has held throughout most of this year, all the way from April to now? And my suspicion is we should have some kind of buying into the close today, and at least try to maintain price action in this channel. Whether we fail or not, I expect that the bulls are going to try to do it. I would not be surprised if we bounced and tried to test the 50-period moving average over the course of the next few days, maybe Thursday, Friday, maybe even into Monday or Tuesday of next week. And then from there, figure out whether we have enough buyers to try to stabilize, or whether we need to finally lose this channel and start to trade sideways. Those of you guys that are regulars in the Wednesday webinar know that we've been anticipating some selling pressure in October I think something we've been targeting over the last 2 or 3 weeks now is expecting some selling pressure to really come in, and we are starting to see that. And I'm still long-term bullish on the markets. I will say I have a few more reservations right now than I probably did last week because of what I'm seeing out of IWM and how quickly we lost this channel on the S&P 500. But overall, I'm still looking to buy the dip. I'm still looking for a buying opportunity. I still think that we are in a good place overall in the markets. This was something that was necessary, something that I wanted to see. The market was getting to a point where it was just shrugging off any kind of news and just continued to grind higher. Every time we had any kind of an impact as far as selling is concerned, it lasted maybe a day, maybe 2 days, and then we'd immediately start to kind of climb back up and start inching our way towards highs. And when a market gets like that, as you can see, if we just scroll back the takeaway about a week, when you start to get these strong uninterrupted climbs, what ends up happening is you start to get this imbalance where sellers don't have any sort of impact and buyers keep chasing price action higher. And what happens is the longer this goes on, the weaker the hands are that are buying this at the highs, right? You start to get traders with less discipline that start to chase this price action because they're worried they're never going to get the value that they're expecting or want. So they're not buying at the prices that they think the S&P 500 is at or worth. They're basically buying ahead of time because they're worried that they're going to miss any continuation. And so what ends up happening is eventually, when you have enough weak hands or enough wrong people, you get that big drop. And that's where we are now. We finally started to get those traders and started to shake them out and wipe them out. And the smart money is going to come in at some point soon and figure out what they consider to be the right value. And this is a typical sort of cycle that happens in all equities. This is why price goes up and down. This is why sometimes it's better to wait, even if you think something's going up because you don't have the right risk reward. It's because of situations like this, where if you're buying with poor risk reward, well, you're setting yourself for a position where you have to sort of step out of the way and wait for it to come back. So that's where we are now. Again, I think the S&P 500 losing this channel is not a good thing, right? So I'm going to be a little bit more patient as far as waiting for the right opportunity to get involved. I think at this point we have to look at two scenarios. The first is that we continue to pull back and test this area around 280. And that looks like it's probably going to be a likely scenario. The other scenario is that we form lows today, and then we spend the next 4 or 5 days trading in this area before figuring out whether we can hold back above 286 and just this becomes a really quick shakeout and we stay in the channel, or whether we come up here, fail at 287, and then come down and test 280, and then possibly even all the way down to the 200-period moving average. If I had to say which is the more likely scenario, it's probably a coin flip, but I'd say the more likely scenario is that we at least try to come back up and retest 286 before we come down and test 280. I would not be surprised if we did hit 280, but my inclination is that we're likely to kind of come up and test this 286 to 287 before we really sort of say goodbye to this channel. And then, of course, there's always the possibility that we do find some buyers and we come back inside and then remain in this channel as we close out the year. I think that's the least likely scenario playing out right now, but it is potentially a scenario. But for that to occur, we need to see a strong hammer into today's close, close maybe back above 284. And then from there, we'd want to see price action get back above 286 and then really start to challenge that 50-period moving average before things got ugly. Again, I think the more likely scenario is that we continue to flag here, start to form a new flag, and then try to flag around this channel, and then probably fail at 286 and then head down to 280. And then from there, I think we're going to have a situation where we should have a lot more stocks at strong support levels, at strong value levels. And if that's the case, then we could find better opportunities to go ahead and get involved in some names. Now, if we take a look at the NASDAQ, you'll notice that even though we've had the same selling as the S&P 500, because of the previous relative strength, we haven't lost any serious technical levels. Yes, 178 was a pretty good horizontal level of support. We did lose this ascending trend line a bit before the other indices, and that was maybe another hint that we were going to have some selling, which we discussed last week. But we haven't lost our longer-term trajectory yet. We are still above the 200-period moving average, which of course the S&P 500 is as well, and we are above what I consider to be the stronger value level, which is 171 to 170, right here around that red trend line. And again, same sort of idea. Where we could probably spend the next few days trying to retest this 178 level and then ultimately come back down. But it would not be surprising if we closed the week and then tomorrow opened even weaker and came down and tested the 200-period moving average. I think both of those scenarios are likely in play, with, again, the least likely scenario being that we bounce and then end up kind of getting back above 178 and then just sort of spending some time rehashing this price zone. I think that's the least likely scenario, but it is a situation that could happen, so we want to be ready for that just in case. But the more likely scenario is that we flag somewhere in this area and then eventually probably continue to the downside and test some lower levels. If we hit 171 in the next couple of days, then I'll probably be a little bit more patient about buying the dip. I'll probably wait for a bear flag to form in that area and then hope that it eventually turns into a base that breaks back to the upside. If we flag in this area, then I'll likely to be the same thing. I'll be waiting for resolution to the downside before I want to go ahead and get involved. And then, of course, be ready just in case we break to the upside. For the most part, as you can tell, I still suspect that we're going to have more downside. I think the next couple of days will probably stabilize. After all, we've had 3 pretty sharp down days out of the last 5. So more likely than not, what's going to happen here is we have at least another 2, 3, 4 day pause. The last pause was only 2 days before we resume to the downside, but I suspect again that we'll probably see a couple of days of pausing because there's going to be some traders now that are already looking to buy the dip, right? And overall, even though this looks bad, if we go ahead and take a look at a weekly chart, you can see that there's still really nothing that drastic happening on the Nasdaq, right? And it's going to be the same thing with the S&P 500. If you really look at the big picture, there's a lot of room to the downside where we're still in a bull market, right? We could drop all the way down to 255, 260, and then still, if we just trade sideways and start to bounce, then all we're really doing is building a big base and just establishing that broad range that we started the year at as our next sort of price zone to build upon and start to make our way even higher, right? So I think if we look at it from this perspective, if you really look at the weekly chart, we're not at a spot where we need to be worried about the market in the long term. It's more a matter of understanding the short-term fluctuations and positioning ourselves in a way to take advantage of this rather than getting punished by the regular ebb and flow of the market, which is what's happening right now to traders that are getting really hit hard, is they didn't respect the normal ebb and flow. They chased the price action higher, and they're paying for the price with it now, right? And of course, everyone's paying it to a certain extent. Anybody that trades actively is going to have losing trades today, right? Even myself, I've been pretty adamant about expecting the market to pull back, and that I didn't like the risk reward over the last couple of weeks in particular. I've been really pointing out how a lot of names are not looking that great on my watch list, and that I didn't think the risk reward was there. But I'm still trading. I'm still obviously taking trades here and there because it's my means of income, and I need to. So I'm taking a hit as well on some names. But overall, I think we're still positioned well with the names that we've been looking at. And we've had some trades that are holding up and some trades that are still actually performing decently, even in a sharp sell-off. Those of you that are regular Patreon guys, you'll know obviously that we had some good, nice oil names, and you can see there's a lot of red on the board here. Those are a lot of the oil names, but we do have stuff like Walmart that's still doing well for us, despite the fact that the market is doing poorly. We have some names that are green, and yes, that's not a good candle. It looks like it's heading back down, but not everything is down 5-10%, right? So we're still doing okay, and overall, what you want to do in these situations again is you want to stick to strength. You want to be trading relative strength right now. You don't want to get over aggressive. A trend that we've noticed over the last few weeks is that the Dow Jones has been performing better. The small caps and IWM have been performing poorly. And so what you want to do is you want to make sure that you are focused in the right areas. And we'll get into those areas as we transition into the chart requests, a little bit more specific information. Now, if we look at the Dow Jones, you'll notice again, it's an ugly day today, but overall, relatively speaking, it's in a much better place than the S&P 500 and the NASDAQ. And of course, it's going to be in a much better place than IWM as well in the small caps. We're still above the 50. We're sort of in between the two. We're chopping. We're back in this channel, but notice how much room there is to the downside before we get to the bottom of that channel, before we get to the 200-period moving average. It's the same idea. We're likely to spend the next few days rehashing this and then probably coming back and testing lower. There is the chance that we have another big, strong sell day. If we do, we'll probably start to approach this green trend line. With the relative strength that we're seeing on the Dow Jones, we probably come short of it and maybe land somewhere here in the 255 area. And then again, the very least likely scenario is that we bounce strongly off of the 50 and then come back and hold above 263 and then eventually come back to challenge highs. I don't think that's the likely scenario. But again, if we do start to see strong buying, we have to react to it, right? But the more likely scenario is that we're going to come up and we're going to flag here and start to probe this 263 area and then probably roll over from there and then maybe probe a little bit lower. And again, it's more likely to do with what the other indices are doing than what the Dow Jones is doing. If you're looking to trade, I just mentioned a little bit areas to look at for strength. Well, the Dow Jones is one of the areas you want to look at. If you want to trade and keep your trades safe, look for relative strength. Well, just screen Dow Jones names and just trade the ones that have charts that are looking good to you. Look for some good, strong support zones in Dow names and wait for them to get to those support zones and then buy those areas. I think that's a pretty easy way to approach the market until we see this sort of selling pressure finish and dissipate. And then from there, you'll have sort of a leg up on the competition because you'll be probably taking advantage of or taking trades in names that are going to stabilize first and bounce first. And if they do continue to drop, they'll drop the slowest because that's where the strength is. And these are the names that traders have been the most reluctant to give up. Again, if you look at IWM, you can see traders have been very fast to give up small caps, right? If you've been trading small caps, you've been getting hit really bad, right? And this is something that we've been advocating, is staying away from small caps, staying away from the relatively weak names, because the market's doing it. And as you can see with IWM, this is actually pretty bad, right? And this is something I mentioned last week I did not want to see. I did not want to see the small caps back below 160, below the 200-period moving average, below this base that we spent sort of the second half of the year on. This is not where we want to be. And I think this is the first real warning sign that maybe the selling is going to last longer than we expect in this market. My thesis over the last month or so has been we should get a strong sell-off in October, but it should probably lead to a rally into November and December, right? And I think the one sort of concerning thing I'm seeing out of the markets right now is this. If we continue to sort of sell off an IWM, and if we start to approach this range and really hold inside the range that we spent the first half of the year, well then I think to a certain extent all bets are off as far as where we could go from here. Again, I'm not ready to say we're in a bear market. I'm not ready to say that this bull market is done. But I will say that this is a warning signal and one that we should watch. Again, look at the weekly chart. Look at what's happened over the course of the last 2 years. And overall, this is still very bullish, right? We've seen selling like this before. We saw it at the beginning of the year. We saw it last summer to a certain extent. We saw it even way back here in 2016. And the market has always been able to react to this and sort of build upon it and make its way back above it, right? And so even if we continue to sell off, even if we come all the way down to 150, even if we come all the way down to 145, who's to say that it's not just establishing a base that's going to play out over the next several months or even a year, and then eventually resolve to the upside. So I think that we should still be focusing on buying. We're not. I don't think we're at a point where we need to worry about shorting the market, about getting overly aggressive with short plays. We're still looking at buying dips. We're still looking for value with names that we like. But that being said, small caps are not names that we like right now. Small caps are names that we should be avoiding. And if this persists, then at the very least, it likely means that we're going to be trading sideways in the overall markets. Over the last couple of years, there have been many periods where the small caps were much weaker than the other names. And that did not lead to a market reversal. That did not lead to a bear market. What it led to was a market that was disconnected and chopped around and sort of traded sideways. So there's always the chance that that's what's happening here. Similar to what we're seeing in the other markets, the ideal, well, not the ideal, but the likely scenario is that we come back up and start testing the bottom of this base, and then ultimately probably roll over and start to explore lower. You don't want to see that with the small caps, but that's probably what's going to happen. If we have another strong sell-off, we're probably going to come all the way down to 150, 155, 154. That was the opening range of the year. It's been a level that we haven't spent time on for a while, but there is a potential for us to head all the way down there as early as tomorrow. If the selling continues to sort of accelerate, and we haven't really had capitulation yet. You look, there's pretty strong volume, particularly on some of the other indices, right? If you look at the Dow Jones, well, that's not the Dow Jones. You can see pretty strong volume. The Nasdaq, strong volume, and the S&P 500, strong volume. And then the only thing I really want to point out from here, which is one of the things that leads me to believe that maybe we consolidate here, is volume has decreased as we've dropped, right? You can see a clear pattern down on the S&P 500, a clear pattern down on the Nasdaq, clear pattern down on the Dow Jones, and not quite as clear on IWM, but to a certain extent, lesser volume in the last couple of days. So selling pressure is probably dying down despite what we're seeing today. Now, again, today's not done, right? The volume can still kick up by the close, and we can end up with a higher volume breakdown than what's being anticipated. And if that's the case, then maybe that's a hint that we're going to have more downside tomorrow. But if we can sort of bounce here and hold steady into today's close, then I think what's likely going to happen here is volume will continue to decrease as we sort of stabilize and spend the next couple of days trying to get back above these levels of resistance and these little ceilings that we have in all four of the major indices. But from there, unless we get strong buying coming in, the likely scenarios that we end up kind of rolling back over and exploring a little bit lower than where we are right now, and a lot of those support levels that we've seen across the four major indices that we've been watching. So that's the basic idea. What we should probably expect over the next couple of days. It's definitely negative, but I think it's negative in the short term, maybe intermediate term. But I think the long term we're still fine. Worst case scenario is probably still sideways price action over the next few months. Obviously, the best case scenario is we get a nice winter rally, and I don't expect us to really crash to new lows. It could happen, right? I'm not omniscient, and I don't know what's happening, but I suspect that more likely than not, what's going to end up happening is that we continue to sort of explore lower for the next couple of weeks, but over the next few days and probably into next Wednesday, we probably trade sideways as we sort of let this volume wane and this momentum and see if we can find enough buyers to stabilize and try to get back above some of these key levels. Another area, of course, to look at is when you see a market like this is you could shift, right, and trade currencies or commodities, and that's what we're about to get to in a second. If any of you guys have chart requests, go ahead and add them now. Let me know if it's a trade that you are in or trying to enter, or if it's a trade that you're looking to stop out maybe, since the market's so red, we could look at support levels for you. While I start looking at commodities and the US dollar, let me know what it is that you guys are looking to trade. Here's a look at UUP, the US dollar index. And you can see that the US dollar has actually done pretty well since last week, but the last 2 or 3 days, we've seen some selling starting to come in. You can see this trend line, which has sort of become a median for this big move that it's had. We're starting to lose that and kind of come back down and retest the moving averages. Maybe come down and test 25. So it looks like the US dollar maybe starting to slow down, but that's not necessarily the case we're seeing across the board. However, it is what we are seeing versus the euro. The euro, you can see, starting to stabilize here, get a little bit of support. It did break down past the key level, and you can see the bear flag. This is sort of the idea that I was mentioning with the markets, right? You have the big sell-off, then you trade sideways and try to get back above a key level. And that's what the euro's trying to do right now. And if it can get back above 115, then I think there's a very good chance that it comes all the way back up to 117. If it rolls over, which doesn't look like it right now, but all you need is this to sell off back to below 115.20, and then all of a sudden you've got a big wick. And if it rolls back over, well, then we're likely heading lower, back below 114.300 and probably all the way down to 114, right? So I think this is sort of one of these moments of truth for the euro. It needs to stabilize and hold above this level. And then if it does, then I think we've got some upside, and the US dollar maybe takes a break and slows down. Now, in contrast to that, the US dollar has actually gained some strength versus the Canadian, probably due to oil having a couple of days of selling off. And looks like it wants to break from a bullish perspective outside of this channel. A lot like the euro, if this holds, then we can have a breakout and a move up to maybe 131 to 132. If we roll over here, then we're probably going to come back down to about 128, and then probably all the way down to, well, the bottom 128 instead of, 129 over here. Right, so I think another moment of truth here on the U.S. Canadian. It's up against the 50-period moving average, and it's attempting to break out of this channel. And so again, it could really explode to the upside here, or it could roll right back over and fall. So I think another one that's kind of, it's up in the air as to what exactly is going to happen. And then finally, we look at the U.S. versus the yen, and we finally stopped out of that trade that we've had long from about 111 all the way up to 114.5. I was looking for 115 as the ultimate target on that trade. We didn't quite get there, but we did pretty good on it and got all the way up to well over 200 pips on that trade. And that worked out pretty well. Now, the U.S. dollar looks like it wants to maybe come all the way down and retest 111. And we'll see what happens here. This is going to be a level that it's contending with now around 113. And we'll see what happens here. But this one shows that the U.S. has lost some strength versus the yen. And I think this is probably more a function of yen strength. But again, I think across the board, we're seeing the U.S. dollar lose strength against the euro and lose strength against the yen, while it maybe is trying to pick up against the Canadian, which interestingly enough is sort of, we're still getting a little bit of divergence here between those three crosses. And we'll see where that heads in the near future. Because the U.S. dollar is still kind of going back and forth across different boards, gold and silver have not responded at all. You can see it looks like it's trying to bottom here, but still not very interested in this trade. When you look at it, we're still below major levels. You look at it in the weekly chart, and we're below a critical level, and this is a longer-term bear flag that probably will turn into a base. But for the moment, I'm not that excited about this. Again, I think I'm still waiting for better opportunities on gold. I'm still waiting for better opportunities on silver. You can see that we did try to bounce, and that ultimately turned into a failure, and it's kind of coming back down. And I do think it's starting to base out here. But I don't think I'm ready to go ahead and try to get involved with gold or silver. I think that there's still there's more potential for nasty surprises to the downside. Even though I think that it's probably going to bounce here, I think that there's still potential for downside surprises that I don't want to be a part of. So I'm going to probably stay away from these for a little bit longer. And then finally, we have oil. And And you can see oil did sell off, which was welcome, right? Despite the fact that I actually entered a few oil names yesterday, I didn't really want to see oil break out. I did want to take advantage of this trend if it did. And right now it's kind of coming back a bit. I don't think any of us really want to see $80 oil right now. I think oil is still bullish, but with today's candle, it looks like it maybe needs more time to consolidate. Maybe kind of come back and retest the 20-pair moving average and even maybe the 50. I don't think it falls below 70. I think 70 is still a good level. I think at this point we can probably look at something like this as where we can expect oil to come down to. So this would be the idea, right? That it stays somewhere in this range and then retest that ascending trend line. And then from there probably comes back up and retests 75 and builds up some pressure to either break out or lose this trend line and come back down and test the 200. So that's kind of where we are with oil. Oil names did not respond well today to today's selling pressure, but I think overall, we discussed earlier Dow Jones names as an area that you probably want to take advantage of if you want to look for relative strength. I still think oil names are a space that you want to go ahead and look at if you want to trade relative strength. Most of them are still holding up in pretty decently. And even if they sell off, they're going to come down to good support levels where you could look at buying them as value buys. And then one last area that actually has done okay recently is agriculture names. And again, today's sell-off is pretty big, right? It's gonna be across the board, and everything's gonna be impacted by it. But there were actually some nice agriculture names that were printing some nice patterns before today. And these might still set up for nice value buys once this selling sort of dissipates. And if we sort of take a look and see if they stay above their bases and try to sort of establish, retest these price zones and go ahead and enter above them. That's pretty ugly as well. You could see Mosaic holding up decently. And again, probably more downside expected here, but it could eventually lead to good buys as we sort of approach some of these levels, right? So these are names you can add to your watch list. Probably I'd put this up here. And if it comes down, if the market sells off for another few days and then we start to see some stabilization and maybe the market start to turn up, then maybe this is a name you look at somewhere around here, right? And you can look at it as a possible buy zone. These are the kind of names you probably want to be adding to your watch list, are names that have shown relative strength and could possibly build off of these moves. Now, some of these are not looking quite that great, so you want to still be picky. But you want to look at other areas that maybe have done well recently. And of course, everything's going to be impacted on a day like today. But you want to find names that have the potential to pull back to support and still be technically sound, okay? And yeah, so that's pretty much the markets, the commodities, oil, and a couple of free names that I gave you guys. If you guys have chart requests, feel free to add. No one has added yet. We have a good 20-25 minutes to go here, and I'm all tapped out. I got nothing else to show you guys. So, if you guys have something, let me know what you're looking at. It could even just be it could be a technical question you could say on a pattern on a chart that you're looking at or something. Here's an oil name also. Acting poorly today is one we were looking at yesterday. But if it stays above this base, I'm okay with it. Right? And I think that there's still potential for it to break out even higher. But again, we want to see these things hold above some key levels. Ron, you want to look at Amazon. Where would I buy? All right, so Ron, the first question I want to ask you is, where would I buy as a swing trade, or where would I buy as a long-term entry for a name that I want to hold for a while, right? Because I think Amazon is a strong enough name that it warrants both of those questions, right? Where would I buy if it was a swing trade? At the very least, I'd want to see this trend broken. Now, we do have earnings season coming pretty quickly. So there's going to be an issue here, right? Amazon reports on the 25th. That's still 2 weeks away, right? But that's going to lower our window of what we can do with Amazon. And it's going to be the case, by the way, with a lot of names. Those of you that maybe are new here don't know this, but I always recommend that you don't swing trade through earnings. That doesn't mean you don't trade through earnings. I actually have spent quite a few years now trading almost nonstop through earnings season, right? That's one of the workshops I've held quite a bit. This year I'll probably do it a little bit different. I'll probably do the earnings workshop through Patreon and set it up as a separate service. With the regular Patreon members that I have now, maybe getting access to maybe one, a trade here or there to give you guys some samples on how it goes. But during earnings season, I think it's important to understand that there's the potential for something to move in either direction pretty drastically. And it's hard to predict the direction. But what I have found is that it's not that hard to predict the volatility. A lot of names historically behave in very similar fashion throughout earnings, right? And Amazon is one of those names that has had some pretty volatile pasts, right? I'm not logged in right now, so I can't show all of it. But you can see it averages about 7 to 8% per quarter, and sometimes it goes as high as 10%, right? And 10% is pretty big on a $1,800 name, right? So you're looking at a $180 move one way or the other. So you don't want to swing trade through that because you don't have a stop that can accommodate that kind of overnight volatility, right? So that is the first sort of real problem with looking at a swing trade right now on Amazon is you know that you could only be in it for 2 weeks, right? And then from there, you're going to have to figure something out, whether you replace it with options, you just totally close it out, or what you want to do, right? So that's the first issue. The second issue now, of course, is what can we find in 2 weeks that's going to work, right? And so the first thing is we want to see it break this trend line. I don't think that there's another strong support level until way down here at 1600 and the 200 pair moving average. There is a decent level right around here. Right? So what we can do here is if Amazon can sort of do something like this, and then eventually it probably takes a little bit of time to break through there, but if it can get past this, then I think we can make a case for a trade back up to the 50 or the 20 pair moving average. Probably the moving averages will come down and meet price somewhere around here, right? So there is the potential for a swing trade here. How it plays out depends on what the market does. As I mentioned before, I suspect that the markets are going to trade sideways and then eventually probably roll back over, which means that on a trade like this, if I wanted to go ahead and take it, I'd probably be pretty proactive about taking profits on it. I don't think I'd be waiting for a move back up to 2000. I'd be looking for a bounce up here into the 1850s and then probably get out as it meets the moving averages. And then if we had a serious breakdown, well, then I would probably be pretty excited about it at 1600. But again, because of earnings, I'd be a little bit indifferent about trying to swing trade it through that. Okay. Keith, you're asking, what do you think about shorting? Oh, Wayfair. We'll look at Wayfair in a second. All right. So the next one up was Jax. You wanted to look at Target, right? All right, and Target was actually a name that I had in my Patreon page as a trade that I shared with traders way back here. Right, you can see once it really broke an established price above 79, had a really nice 10-point move all the way up to 89, and only recently really gave us cause to get out of that trade. At this point, it's actually rolling over, and did it fill? It has not. For the most part, it filled the gap. I mean, I think it's still a little bit of room, but for the most part, it tried to fill that gap already. I don't like what I'm seeing today at all. Right? You've got these big wicks here. A lot depends on how we close today, but this looks like something that just lost this range here. Right? If you look at it from that perspective, right? If you ignore the wicks and you just take a look at where it closed that day, and then what it came down to, and now you notice 3 different times now, 1, 2, 3, it's tried to get back above this 86 area and has failed, right? If it closes below the 50-pair moving average today, I think it's going to come back down to 83, and it's probably going to head a little bit lower. So this is probably one that I would not look at from a positive perspective. This looks like it wants to go head a little bit lower. And I'm not sure, maybe that was your question because you said ready to break into the gap. I think it does want to come back into this gap. It looks like it's a name that's going to roll over and explore this area. Actually, we'll do it like this. It probably wants to explore this area and then possibly even all the way down to 78. But I expect it to sort of roll over and really start to fill in this gap and start to test this area around 83 to 82. All right, so if you wanted this as a long trade, then I think you need to wait a bit longer because, again, this is a kind of a key zone here. And we're going to put these trend lines just to kind of keep an eye on this as we look forward. And then if we go and take a look at this, well, that's actually somewhat bullish. But we'll see what happens, whether that trend line can persist or not, right? Because you can also make the case that the trend line was here. Right, and I think that's probably that's the more likely scenario, was that we just lost that trend line and have more bearish momentum now to the downside. I think that's the picture I have of Target right now. So in my mind, this has more downside to go, and I think it's going to do a lot like the markets, where it's going to probably try to get back above 86, fail, and then head a little bit lower. Okay. Not sure what Wayfair's ticker is. W. All right, so you're thinking about doing a call credit spread, right? So, okay, so first problem, I think we've had this discussion before, Keith. I don't like entering call spreads on strong down days. And the reason for that is that at this point, the calls value is depressed quite a bit. Now, granted, volatility has gone up, right? So there is going to be some IV that kicks in. But overall, when you have this many days down and this strong of an action today, I think that you are entering at the wrong time from a timing perspective. You want to sell calls when the premium is inflated by a move up, right? So in this particular case, if you think Wayfair, if you're bearish on this name, particularly more that it's not going to go up, right? Because that's the other thing. When I do call spreads, it's not necessarily that I think the name's going to go down as much as I don't think it's getting back above a certain area, right? So I think we can make a case for a double top here. Right, you've got 1, 2, and then the failure. And we haven't had a strong retest of that, right? So I think the ideal call spread on this would be like this. You get a bounce back up to 130, and then from there, you do a call spread, maybe 135, 140, you don't want to go all the way up here because you're not going to get enough premium on it. But the idea is that it should not get back above 131 if this double top stays and remains intact, right? And I think that this lines itself up with what we're seeing in the markets, right? I think the most likely scenario in the market is that we try to stabilize the next couple of days and maybe come up and retest the areas we just broke down from. And if Wayfair can get back up, not necessarily all the way to 131, but at least get some green candles up to 126, 127, to get some value back into those calls, then it would make sense to sell it. The problem I have right now, again, is that, again, it's already dropped 1, 2, 3, 4, 5 days, 7 out of the last 8 days. And so at this point, they've already lost all their value. And you're shorting at a time when Wayfair is probably ready to stabilize, possibly bounce, or even if it continues to drop, you're not really taking advantage of market mechanics to get extra value into your play. So I think if I were to do this, I'd wait. I'd wait for some green candles to put some value back into those calls before I sold them, because I think at this point there's a decent chance that you're selling those calls when they're at their lowest value. You know, for sure the lowest value they've been at over the last week, and likely the lowest value they'll be at for the next few days at the very least. Is there's again, yes, we could break down further, but I think the more likely scenario is that we try to at least bounce, even if it's a bad bounce, but a bounce to try to retest some of these areas that we just lost before we roll over and continue lower, right? So if you're looking at something like that, I think that's the way I'd approach it. All right, guys, we still have about 10 minutes. Jax? All right, you gave me the wrong ticker. All right, so you meant CH, right? Is that Cardinal Health? All right, so this one, okay, that's a much more substantial gap. All right. This is not looking bad here. Doing well when the market's doing poorly. Let's look at the weekly. All right. So this is a pretty critical level, right? And I mean, this looks good. The only thing I don't like right now is the volume. It's still, and it's not bad, right? Because we have kind of a cup and handle, and then we've got the handle here with declining volume, which is what you normally want to see, consolidation on lower volume. But you want to see the breakout on higher volume. We're not seeing that yet, but it hasn't really broken past 55. I think if you're looking at this gap, you want to see a decisive break above 55, which could happen. I probably would wait for that to happen, though. And I think maybe if you're worried about the market in general, maybe you hope you get this, and then you can play it to the long side. I think 58 is your first level, that 200 pair moving average, and you're going to have a lot of selling right at 60. And then possibly you can get to 63. I would be pretty proactive about taking some profits before the gap fill, but you probably want to hold some to see if you can get a gap fill. I think this gap can be filled. It's done a very nice job of building to that. It's just a matter of it's swimming against the current right now with the overall market, right? So it's going to have some work to do along that respect. But really, I mean, you could have bought it today already, preemptively, because it did break this pattern here. Whether you want to draw that trend line like that, or whether you want to draw it like this, you can see that it is displaying strength today, but it still has a lot more work to do to really start to challenge that gap. It has to get above this area around 55.30 or so. I think that's the key. All right, Keith, financials they report earnings pretty quickly, right? Now, for the most part, most of these guys report next week, right? Or actually, that's already on Friday for J.P. Morgan, right? And then you've got say Bank of America on the 15th. Citibank also on Friday. So earnings are going to come pretty quickly for financials. They looked like they were picking up some steam before today, right? I mean, I think overall, relatively speaking, they're still weak compared to the markets. And they were looking okay, but this is a pretty big rollover. You'll notice, okay, this white box here, that's the range, the opening range for the year. So technically, financials have been down all year. So relatively speaking, they're still weak. When the market is like this, I prefer to look at the relative strength, and I prefer to stick to stronger names, because when we have big sell-offs, these weaker areas tend to be the ones that get hit first, and they tend to get hit harder. So at the moment, I'm not on financials. I think that they have work to do. And I thought that they were getting pretty constructive here. They were kind of following suit with the Dow Jones until September, but then they've taken a kind of a drastic turn compared to them. You'll notice if we go back to the Dow, and you take a look at what was happening here. It was building up some pressure, and then eventually it continued higher, right? After really dealing with that same white area. Again, that's the year's range, the opening range. You can see we were struggling back in July and August with trying to get back above there. And while the Dow Jones names were able to sort of respond and eventually get back to highs, the financial names really just sort of got stuck in neutral and then eventually just rolled over. So for the moment, I don't really have interest in them. If they can get back above this range, again, above 28.30, 28.40 on XLF, maybe I'll be more excited about them. But right now, I'd rather not kind of mess with them. All right, Ron, is there enough support at current price on Netflix to buy? Also, Netflix reports earnings pretty soon as well. October 16th, right? So next week, Tuesday. So that right there means you probably don't want to, right? Is there enough support here? I think that it's a decent level of support. See if that, I think weekly this is above pretty much everything. Yeah. I think this is a decent level of support. I think it's still struggling, right? It tried to bounce. It came back and it's retesting that level. It's a 200 pair moving average. I think 330, 331 is a pretty key level. So it probably bounces here. You don't have that many days for this to work, and this is not an entry signal. So I think it's one of those where we probably want to wait and see what happens, because these guys move during earnings. I more often than not play them to move more than 10%. So again, that's a $30 move, almost $40 to either side, right? So you can come all the way up to the 370s, or you can come all the way down close to 300, right? So there's a lot of potential overnight movement here. So we don't want to take a swing trade and get caught on the wrong side of something like this, right? So I think earnings is going to probably mean stay away from this, but I do think if we weren't looking at earnings, that this looks like a potential support area. And then finally, Jax, you say maybe look at a couple airlines after a big drop. Delta has earnings tomorrow. Airlines usually report pretty quick also, right? Oil prices working against them, but lots of upside. They can be relentless. Yeah, that's a big move. I think you have to wait for earnings and see what happens. This is a pretty major support level, long term, right? $50. So I could see that as a support level. I could see this as somewhere to look at trying to take a long play. typically airlines aren't that volatile during earnings. Right? They move about, well, these guys average about 5% recently, so I guess that's pretty decent. I think you have to wait till after earnings and see if this holds as a key level. This is a lot of action down. I would not want to buy it yet. I know this. Sometimes traders get tempted to catch the knife here. They're like, oh, it's a hammer. It's down that many days. Is that support? Just buy it, right? And what ends up happening is that you're early. And so even if this works, more likely than not, what ends up happening is that it stays chopping back and forth through here, and you get stopped out, or you have to wait 2 weeks before it moves in the direction you want. And then that's not even counting earnings. That's already, that's tomorrow. So I think that this is at a good support level, but I don't think it's actionable yet where we want to go ahead and take a trade on it. I think we need to wait for a few things, but I do think long term that's a pretty good support level. Okay. All right, guys. Thank you for your participation. I want to thank those of you guys that attended as well. I hope that you got some good information today. I know that we're in a market that's a little bit more worrisome right now. I think long term we're still fine, but short term it looks like there's probably still more downside, whether it occurs right away or whether we spend a week sort of building up to try to stop it and then it rolls over. But I do think there is more downside. So just be more careful about your trading. There are still names that can work for you, so I don't want you to be totally absent from trading, but just be a lot more picky about the risk reward and the setups that you're looking at. If you guys have any other questions, you can always ask me on Twitter. You can follow me at Stock Darts. You can join us at our Discord chat and ask questions there. Or again, you can even just go and see what I'm looking at on the Patreon page, okay? Hope you guys have a good rest of today and the rest of this week, and we will see each other next Wednesday.